You actually have an outperform on SeaWorld, a target price of $20 a share. So what makes you so optimistic, Barton?
Well, I want to be clear. I upgraded to an outperform after the stock fell apart in August, after we saw the disappointing attendance trends. It's really kind of a risk-reward call. This is a company that has a history of rebounding from animal concerns. So if we see a repeat of what happened in 2011 when they rebounded after a tragic trainer death in 2010, this should be a better year for attendance, and I think that'd be good for a stock, giving you close to a 5% dividend yield. If they don't get it right, if they continue to see pressures, I think the company can be restructured. I think they've got close to 40% of their EBITDA from Busch Gardens, which is unaffected by all of the animal activism concerns. You could spin that off as a separate company, and then SeaWorld, I think, would be very cheap, potentially taken private by Blackstone, which is a private equity backer here.
Okay, so, that's an interesting proposal, actually splitting this company in two, but is Busch Gardens valued much at all on its own?
Yeah, Busch Gardens is a great asset. You look at some of the other theme park companies like Six Flags, which is very comparable. If you were to value Busch Gardens at something close to Six Flags, this could be a billion-dollar equity that could support $600 million of debt if levered 4 times, which I think is normal for this industry. Someone like Six Flags, I think, over time could be interested in acquiring something like a Busch Gardens. Then you leave apart SeaWorld. You could take it private, work on the brand issues, invest in the environments for the killer whales, or potentially sell the killer whales and get out of that whole controversy. There's a number of roads you could take, I think, to revive that brand over time.
Now, Barton, you were saying that you think Blackstone might come back into SeaWorld following this kind of a breakup scenario that you've just outlined?
Well, what I'm saying is that it could happen mathematically. I'm not saying that Blackstone has said they're interested in it. But if you do the math, if you look at the numbers, they own about a fifth or so of the company right now. If you spin off Busch Gardens and you roll their equity into the remaining SeaWorld stake, that alone would basically cover the remaining equity value and could support a private takeout. Then if you do things, such as invest in new killer whale environments, which they're doing over the next few years, I think that could help turn around sentiment. It could come public again a few years later as a real estate investment trust at a much higher multiple, looking at lodging REITs and other comparables out there. It could be another home run investment for Blackstone, just like the first IPO was.
Is there enough room for even a private equity investor to spend that kind of money on a SeaWorld, building these open ocean enclosures that some have advocated as an alternative to sort of the enclosed areas that SeaWorld currently operates with? Given the fact that companies already fairly levered, if Blackstone's going to go in, even if they roll their equity into a leverage buyout, presumably they wouldn't do it at with only 1/3 leverage or even less. They'd want to lever it up a little bit more, and then to have to spend all that extra money. I'm just asking the question.
Yeah, it's a good question to ask. But if you look at a research note we wrote recently, the numbers really support it as a possibility. I think that's not to say it's going to happen. I think the other alternative for SeaWorld is that the business stabilizes. I think that the American public has a history of liking large animals in captivity. We love things like the San Diego Zoo across town from the San Diego SeaWorld. And I think that if you build in natural environments, which they're planning to do, which they've announced a plan to build these large natural environments, that could help turn around sentiment and make this company's, killer whale environments as loved as the big kind of elephant environments you see in San Diego zoos.
But after this documentary, Barton, isn't it kind of hard to imagine? I was reading some articles about this. Kind of hard to imagine for them to expand on building more assets based on orcas.
Well, I think that the documentary, was seen by, I think, several million people, but a small minority of the American public. Most people, are aware that there have been complaints about things like Ringling Brothers, right? But they've recovered. Over time, I think we're comfortable with large animals in captivity as long as they're treated appropriately. I think that SeaWorld is treating its animals appropriately. You could debate that. But, leave that aside. I think the history is that, these type of problems with perception have passed before, and I think they could pass again. If they don't, you could sell the whales. I think they've got 30-some-odd whales. I think there are transactions a long time ago, but where you could argue that a whale has been sold for $10 million, and you've got Russians and Chinese and others in other parts of the world that don't have the same concerns we have. So you have an asset there that could be monetized. So I think there's a number of ways that you can manage through this.